All right, what's going on, everybody? Welcome back to the channel. It's Millennial Trades. It is December 9th, 2022. Let's just get right into this. The dollar is strong. The dollar will be strong into 2023. This is sort of my philosophy at this point. Considering everything that I'm reading, considering as well as I'm doing trading and just holding a cash position, I truly do think the dollars are going to buy more next year than they did this year. Now, if we have stagflation and the inflation persists, because the inflation numbers were not good that came out today. I think it was the PPI above expectations, near October's numbers, so no real improvement there, which means the Fed is going to be much more aggressive. There's a lot of talk about a new financial regime that we're in. Just some of the comments that we got this week were from Jamie Dimon, basically talking about how the dollar will be strong, but that he's concerned about the emerging markets especially, but probably also Europe. The stronger the dollar is, the weaker all of these other currencies will be, and the more expensive things will be in those countries. A stronger dollar is better for Americans. Hopefully, right? That's the theory, at least. You also have BlackRock, right? Larry Fink from BlackRock, and we've been talking about them a lot this week too, because there's a lot of controversy there. I won't rehash all of that. With the EG, I think it's called ESG, right? ESG policies. But Larry Fink says to throw out your old investment playbook. We're headed for a new regime of greater macro and market volatility. And I'm excited for this. I want to see it, because if it's going to be complete mayhem and destruction, I want to see it. But the point is that you got to be in a cash position to take advantage of whatever opportunities are coming down the line. One opportunity that we don't really talk a whole lot about could be cars, could be luxury cars, could be older cars. Because of the chip shortage that is getting better, right? Prices for electric vehicles may get cheaper in 2023, but I know there's some issues with factories, in China manufacturing for especially electric vehicles from Tesla and GM and Volkswagen. They're having issues staying open because of the COVID lockdowns, but hopefully China's over that now. But yeah, we could see cars, even electric cars, get cheaper in the coming years, especially if this new monetary regime from the Federal Reserve, these higher interest rates for much longer than the market anticipates. If we see all of this, hopefully the prices, the inflation will come down, and your dollars, you'll be able to take advantage of these deals if you're holding the dollars, if you have a cash position. That's how I think of it. The other great reason to have a cash position is that you can trade in and out of the market every single day, be an active trader, an active scalper. You just got to make one trade a day, and you don't even really have to make that much. You could scalp for a few $100s, maybe $1,000 or so. You do this day in and day out, and you don't lose a lot. It's a winning strategy, and you just build up this huge cash position. A little risky. You got to be able to, people that I know keep saying stuff like, I should give you $2,000 in trade, but I don't do that. I trade my own money. I think everybody should take responsibility and trade their own money. I mean, handing off your money to somebody else is just, this is how you get FTX'd. And I'm ready for whatever's coming down the line. I mean, as long as I can keep up what I'm doing now. This week was pretty good for me. I made about $1,200. I had a couple $300 days and had a $600 day. I did not trade Wednesday or Friday, which is today, December 9th. Did not trade at all. Markets were kind of choppy. Didn't really see a lot of opportunity there. And, $1,200 up on the week, it's like, and I've been working as well. I'm catering just sporadically throughout this holiday season. So pulling in a little bit of extra money doing that as well. It was a pretty good week, and we're just going to keep up the momentum. I might slow down the trading a little bit. I mean, next week's going to be a really big event, but come the week of Christmas, it's going to be real slow in the markets. I'm not really planning on making a lot of moves that week. But anyways, another thing that I think the big bankers are worried about, Jamie Dimon, Larry Fink, all these guys that we've been talking about, there is $65 trillion in debt throughout the world. we talked about this, I think, in yesterday's video. A lot of pension funds, foreign pension funds, have to buy assets and they have to convert their money to dollars, especially if they're buying, U.S. equities or bonds or something like that. And there's all these trillions and trillions and trillions and trillions of dollars of debt. If any of these pension funds defaults on that, it's going to basically destroy the amount of dollars that are out there. And this, I guess, would be deflation. I guess this is part of the deflationary plan, perhaps, is to bankrupt and make people default on their debts, throughout the world. Companies, maybe even governments. Again, it goes with the strong dollar. What is going to be the consequences for the rest of the world if the dollar continues to strengthen? So, yeah, that's pretty much everything I wanted to cover. The other things I've been kind of looking into, we talked about the PPI, right? That came in much higher than, a little bit higher than forecast and back to October's numbers. So inflation they've got a lot of work to do. We'll talk more about next week, probably for the Sunday recap or the Sunday review, right? This is more of a weekly recap. We'll talk about kind of what I might do or what I'm thinking could happen next week with the rate hikes and all of that. The last thing I was going to say is, a couple of things that I've been looking into is this whole idea of all the corn, the corn industry, the ethanol industry, and all the corn that we export to the rest of the world. It's definitely a rabbit hole that I've been going down the last couple of days when some of this stuff popped up in my Google feed. Apparently, America is like a corn superpower. This could be a lot of like green or ESG propaganda, but I am looking into that a little bit deeper, and just been trying to spend a little bit of time away from the markets this week because I've been focusing on helping out my friends and stuff, catering. I've been spending a lot of time at the church doing different events. So the holiday season is, it's flying by, and I want to spend it with people that I care about, and I hope you do the same. And I will be back probably tomorrow, but if not tomorrow, I'll be back on Sunday for the market review, and we'll talk about the interest rate hikes next week. And then you can follow me on Instagram at Millennial Trades. And as always, until next time, I'll see you on the next video.